Hello and welcome to FX Street Currency in Play. I'm Matt Brown. I'm joined today by James Hughes, Chief Market Analyst at GKFX. How are you today, James?
Very good, Matt. Thank you for having me on yet again.
Always a pleasure. Great to have you on. Finding it a little bit hard actually to talk about anything the FX markets. There haven't been that many big moves this week. And
Bring on September, eh?
September, I think, is going to be very, very interesting. So we look forward to that. But for today, the trends that we are seeing, euro dollar within familiar ranges around the 118 level, kind of really locked around that figure. Cable soggy around 128, really out of favour. And euro sterling looking at 92. There's been a bit of chat on that we could go to parity maybe this year. I think JP Morgan yesterday. So that's certainly one to look out for, and we've got some slides on that coming up.
Yeah.
And dollar yen, bit above 109, but really this 109, 110 kind of anchored around that level, very, very range bound.
Yeah, and it's interesting, isn't it? Because, I mean, I think last time I was on, we spoke about gold and the dollar yen crossover, and the fact that there is kind of that correlation's working quite well, and when they slow down, they both slow down. And what's interesting is what's been driving the other. Sometimes gold is driving dollar yen, and sometimes the other way around. And of course, you've got the situation at the moment with North Korea where we know that the problems don't go away, but the news flow dies away. And of course, we're all so fickle within the markets as traders. We're all looking at the mainstream media and what comes in, what comes out of Donald Trump. And just because that news flow dies down, really, the market moves tend to die down around it. And we know that obviously oil gets a bit boost with any sign of conflict like this. Gold, very similar for the safe haven side. So that's why we've got that a little bit. I mean, cable, again, the issues are obvious ones. We've got Brexit discussions. There's discussions today talking about how the UK come away from the European courts. So, again, a lot of rhetoric, a lot of hot air that doesn't necessarily mean anything, does it? But it still gives us a little bit of movements in these. But you're right, it is hard to find anything that's really giving us any real big aggressive moves at the moment, and they're just not there. We know it's August, we know that the volume's low, but often we say, well, the volume's low, it doesn't necessarily mean that the volatility's low, but this year it does mean that, and the volatility it isn't necessarily there at the moment. But when you look in, we've got Jackson Hole this week, so this is today really it's going to be the headliners. So we're going to see these any dollar pair is going to be move around. We maybe don't expect so much from Mario Draghi today. We've had some hints about that, about what we're going to see from Mario Draghi, and it doesn't necessarily seem to be much. But still, it's going to give these pairs a bit of volatility around there. And then, of course, as we go into September, what Janet Yellen may well tell us in the next couple of days is the fact that September is going to be the time when we see that the reduction of that balance sheet start, and the FOMC meeting minutes. I think it's interesting that they really don't focus on this reduction of the balance sheet, and we haven't seen them focus on it at all. But what we have seen them focus on is the fact that inflation is still a little bit low, and we're not going to see another rate hike. The feeling is maybe she's leaving the balance sheet reduction discussion to a Jackson Hole speech, and that could very much give us something to go on.
That could be a market moving.
Yeah.
And with regards to investors, for our viewers, you do speak to investors and traders in the market. What's the general feel out there at the moment? Is it wait for September really for big moves, but trade small ranges in the meantime?
Yeah, I think it is a little bit of that. It's at the moment, I think the clients that I'm speaking to are very much trying to nick 20 pips here or there, get in, maybe turn something on the markets, maybe get something in sort of reverse moves after some big numbers, because obviously we get initial numbers, then you can get retracements in those. Look for big moves, because the one thing that happens in August quite a lot, and actually I know it's not necessarily currencies, but it's happened in oil recently, is we get big move one way, and then the next day just real retracements, because the market isn't revaluing itself at a higher level.
There's no real conviction.
No, exactly. It's just jumping because the volume isn't there to hold it. The volatility comes in and jumps it up, but it comes off the next day. And there's a lot of opportunities like that. Maybe not, we're not talking currency-wise sort of 200, 300, 400 pips, but we're talking it's going to jump 50, 60 pips one day, and then it's going to come back the next. And we are seeing quite a few examples of that.
Understood. Well, you've kindly brought along a few slides today, a few things to talk about. We've already touched on euro sterling, but just talk us through this chart.
Yeah, I mean, this is a very, very simple one actually. I mean, we know the strength of the euro and euro dollar. Of course, we know what's going on there. There's two opposite directions. We know dollar's been weak, euro's been strong. Thank you very much. Very simple. But when you take the dollar out, I think euro sterling is quite interesting. And I know we were saying earlier that there is this discussion of parity. A lot of banks calling out the fact that we could see parity before the end of the year. If you look at this chart, I mean, you can't argue it, can you, necessarily at the moment?
No.
There is a particularly very strong move to the upside there.
Definite trend.
There is a nice, we've got this channel, sort of equidistant channel in here as well. We are touching on both sides. We've been playing around. You can see we're towards the upper end of that at the moment, trading at current weekly highs, daily highs, and hitting at that upside level. Underneath the bottom of this, the trend line underneath, you've got the 200 period moving average. So if we do break down, this is a daily chart, so it's 200-day moving average. We break down, we've got the big trend line to contest with, and not only have we got that, we do have the 200 period moving average as well. So it does give us a little bit more sort of concrete levels underneath that, and it just seems very strong, doesn't it? I mean, there doesn't necessarily seem anything coming out of there, and Mario Draghi is very reluctant to talk tapering or anything that's going to rock the boat. So it's Brexit, of course, is the absolute mess that Brexit is, and could always have a sterling positive or negative move that comes out of left field. But away from that, I think the euro's the stronger.
Yeah, with regards to Brexit as well, the euro looks a lot prettier against the ugly pound at the moment.
Exactly.
Unfortunately.
Yeah.
Good stuff. So moving on, we also have an interesting currency pair, sterling against the Aussie.
Yeah, and again, obviously, we looked at things that. What our clients are looking for is, okay, we've got cable, but we're so worried about Brexit that there is some moves, and we know what the dollar is. Now, I know this is sterling still, but and the Brexit moves happen. But remember, we are in August. We are in that time, and we do want some moves. So if anything is going to generate moves, it is going to be a Brexit headline. It is going to be anything like that. And I think this is quite a nice technical move that we've had. And it just shows you throughout, really, for the last year, since sort of summertime last year, this downside trend that we had, this breakout, and this absolute textbook retest of the trend line underneath it. So I know that, and obviously this has happened back in April, that the breakout and then the retest. The retests have happened in the last month or so. But it is interesting how that has retested again. Now, obviously, we have a trend line coming in on the other side, which is on the downside, which I haven't necessarily put in here. But you can see it's a very clear break up to some key levels on the upside. This double top area, which we did fall slightly short of, but obviously, if you're looking to the pip on everything else, you'll never actually place a trade in your life. So
there or thereabouts.
There or thereabouts. So, and then we've fallen off there. So it is a very key break and a nice retest in that. And if we actually go into the next slide,
yeah, you've got an hourly.
We go in a little bit closer on this, and all I've done is just put fib retracements on this, and I'm one for keeping things as simple as possible.
Yes.
I mean, I'm a qualified technical analyst, yes, but a lot of the gumph I can throw away quite happily and sort of
keep it simple.
Focus on the simple stuff and forget obviously why fibs are there and how they're calculated. They're just giving us nice support and resistance levels. And if you look at this to the downside, you can see the lows that we've hit, the fibs come in, and the 23.6% retracement has been respected really well. And what I find interesting on this as well is even before we bottomed out, we've seen the level, it hasn't enjoyed anything above that. So we haven't seen any real hourly closes above that in the last couple of weeks. So it is a case of sitting there. It is a nice upside resistance level on there. You can see the market falling away from it after yesterday's big run higher. You can see yesterday's last couple of hours, this morning's big run higher. You can see the market falling away. Obviously, this has moved on a little bit from earlier, but you can still see that there is key nice levels in there to play some ranges around.
Yeah, so definitely one to look at
Absolutely.
in these markets. Good stuff. And finally, we have the calendar, and as we all know, it's the Jackson Hole Symposium, Word of the Week Symposium there. All focus has been on that. We've already touched on that, but it feels as if nothing done with Draghi. Certainly Yellen is going to be the key, and look out for that. And as you've rightly said, it's the dollar pairs that will move on the back of this.
Absolutely, they are going to be the focus. I mean, there is just a tiny hint of worry around Mario Draghi, because we have seen in the past, we're not going to say anything, nothing's going to come out of it yet, here we go. And obviously previously when Mario Draghi said, we're not going to do tapering, quite famously a few weeks ago, the markets went, well, we don't believe you. And we saw the moves anyway. So I just worry that Mario Draghi could do something, or not necessarily do something. He will keep quiet himself necessarily, but whether the market will read into something that isn't there. That's the worry.
And as a trader, are you best waiting for the news rather than trying to second guess?
I would say so.
Wait for the move to happen.
Because I personally don't believe that the tapering we're ready for tapering. The Eurozone is in a situation where we are performing particularly well. Actually, for the first time in a number of years, what it's doing is working. So why try and change that at the moment? And I think that's the feeling within the ECB. And I think personally, when he said we're not going to taper, he probably did mean it. So it's a case of maybe keeping away from a euro pair for just until Mario Draghi's gone back to Europe and is settled in his home. Yeah.
On that note, James Hughes of GKFX, thank you very much for joining us today on FX Street, Currency in Play.
Thank you very much.